Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Today's episode, we're going to talk about a lot of things going on with the macros. We're going to talk about Tesla. We're going to talk about what I think is going to happen over the next coming weeks and coming months. I do think that we're about to hit this inflection point going on with the stock market, namely with Tesla. And then we're also going to talk about any news that might come up during this recording regarding Elon Musk and Twitter and accusations and all that. The hearings have ended already, so I'm just kind of on standby waiting for everything. So that's what we're going to talk about today. If you guys want, do me a favor, hit the like button, hit the subscribe button, ring that bell, and let's get into it. All right, welcome back, everybody. I hope you enjoyed your weekend. I hope you had a great time with your families. I hope you were able to unplug, unwind, maybe catch up on some chores, catch up on some family time, catch up on some R&R, get essentially anything you needed to with this 3-day weekend. So I know we had a good time. We were able to kind of get our lives back on track. We've been somewhat on this jet lag ever since we got back from Spain. So now we were able to get up this morning. We were able to go to the gym, come back, do some work, and just kind of get back into our normal lifestyle. Not only that, I got a brisket in the oven right now, so hoping that comes out good. Got another few hours, and then we're going to pull it out and see how that is. So we had a great weekend. Again, hope you did as well. All right, let's get into the important stuff. So I want to try to highlight a few things going on right now with the macros, all right? And we're going to talk about the macros because you have to know about the macros before we actually get into talking about Tesla, all right? So, right, we want to start from somewhere to get somewhere else. We're going to start with the macros, then we're going to talk about Tesla. One leads into the other. So right now, if you're not aware, Tesla is essentially not trading based on Tesla, all right? The stock and the company are essentially disconnected right now. Everything happening with Tesla stock is purely driven by the macros at the moment. Now, this is true for the majority of the stock market, okay? Now, even though Tesla has had a lot of good things happen to it, we haven't really seen that reflected in the stock price. So right now, everything driving Tesla stock has to do with the macros. So what's going on with the macros? All right. Well, there's a lot going on with the macros, right? We've got inflation, right? That's on top of everybody's list. We all know about what's going on with inflation right now. Okay. Then we also have the energy crisis going on with Europe and California, right? Or just the world in general, right? Like I said, I was in Spain about a week and a half, 2 weeks ago now. We're going to Greece at the end of this month, and I think it's going to be the same thing. In Spain, there are regulations about how low the AC could be. So it couldn't be below 78 degrees in any restaurants or houses or anything. They're regulating it pretty hard. Okay, we see in China where they're shutting off, supercharging stations, and they're shutting off street lamps and, anything to do to conserve energy. We see France now asking all of their citizens to reduce by 10% so that they don't have to have any real pain or, any wow, I can't speak today, but pain in France when winter comes. So we have an energy crisis. We have inflation. We also have a war still looming over in Russia and Ukraine. We have a potential escalation, we'll just call it that, with China and Taiwan. Of course, the United States has its fingers in all of this as well. So we're not immune from that, or we're not, isolated from that. So there's a lot of things going on. And it doesn't take a lot really to get everything back on track. So let's start off by talking about inflation. So why do we have inflation? Well, this is really not rocket science. It's pretty basic, pretty straightforward. We have a lot of demand. We don't have enough supply. Now, supply does seem to be catching up. We see it with a lot of retailers. On top of that, you see the Federal Reserve Chairman Jerome Powell. They are increasing interest rates, right? So what that does is it suppresses demand and it allows supply to try and catch up. It's not the greatest tool. It's a very blunt instrument. I know that's a cliche phrase at this point, but it's true, right? It's not something that really has a huge impact. Why do I say that? Well, because if the issue right now is that we don't have enough supply and there's too much demand, well, let's take energy, for example. No matter what Jerome Powell does, no matter what the Fed does, even if they increase interest rates to 100%, it will not it would not change the fact that we don't have enough supply when you see OPEC cutting oil, when you see Russia not selling to any G7 nations now, and you see everything that's happening there. It doesn't fix the fact that you have China having COVID zero lockdowns, right? The supply chains there get all screwed up. So no matter what the Fed does with interest rates, it cannot fix that. So the real issue are the supply chains. Now, it does seem like those are getting better. And what the Fed is doing right now with interest rates does maybe seem to be having some effect. Now, keep in mind, we've had a lot of interest rates hikes so far, but I don't think we've seen any of them really take hold into the economy just yet. And I think we're going to start seeing that moving into the rest of the year and into next year. So there is some hope for optimism there, especially when we see what happened with this last CPI report. All right. In July, we saw us go from a 9.1% down to 8.5, 8.6. I forget off the top of my head. Again, remember, this is all stream of consciousness. So any mistakes, don't hold me accountable. I'm just a dude on YouTube. All right. So anyways, we saw it go from 9.1 to about 8.5, 8.6%. That was great. That was a sign of potentially a peak of inflation. But we've been caught with that trap before, so we don't want to get too eager with it. Then we saw Jerome Powell come out, and he had a very boisterous kind of hawkish announcement or speech during Jackson Hole. He didn't take any questions. He went up there, essentially an 8-minute speech saying we're going to be aggressive. We have a target rate of 2%. We're going to get there one way or another. He mentioned Paul Volcker. If you don't know who he is, he's the one that essentially raised interest rates to like 17, 20% to combat inflation in the 80s, 70s, sometime around there. I'm too young for that. But anyways, the point is he kept invoking the Paul Volcker name, which just, again, leads to that hawkish rhetoric that we saw from the Fed. Now, I made it clear, in my opinion, I think Jerome Powell is trying to scare the market. I think Jerome Powell is trying to make sure that the market doesn't get too ahead of itself and say, oh, we had one dip in inflation numbers. That's it. The Fed's going to pivot. We're done. We've won. Jerome Powell doesn't want to have the legacy or the responsibility of dealing with the market getting ahead of itself. So I think that this was a strategic message. Again, I could be wrong. Perhaps he's just being straight with us and he said what he said because it's what he really feels. But maybe it's my optimism, right? So keep in mind, we all have our own biases, so it could be my own biases getting in the way. But I really do think that he was trying to just make sure that we don't get ahead of ourselves. And that's why he was so blunt with what he was saying. Okay, but then we also saw some really good numbers with PCE. We've seen good numbers, PCI. We've seen the jobs numbers, right? The jobs numbers was a miss. I think they were expecting 318,000 jobs created, and instead we got 315,000. So 318, 315. Not only that, but unemployment ticked up from 3.5% to 3.7%. So you take that, you add in that last CPI number, you see what we get with the PCE core, which, by the way, when Jerome Powell says 2% target, what they're referring to is from the PCE, okay, the core of the PCE. So we're a lot closer than people think, and that's why the 4% target rate seems to be the high that we're probably going to get to. Anyways, the point is we're starting to see more and more data that seems to be saying that we have peaked. Now, we don't know how fast inflation is going to come down. A lot of people think it's going to be quickly. Elon Musk thinks it'll happen pretty quickly towards the end of this year. We don't know. But what we potentially will know with this September CPI number is whether or not we've peaked. Now, if you look at the Atlanta Fed, or not Atlanta, excuse me. I'm so used to thinking about the Atlanta. When you look at the Cleveland Fed predictions for CPI, they do expect it to tick up slightly. So we'll see what happens as we get closer and closer to next week where that data comes out. Now, what happens after that? After that CPI data comes out, we get another meeting, I think a week later, with Jerome Powell and the Fed, and they make their decision on the rate hikes that they're going to do. We know there's going to be a rate hike. That's not a surprise. What we don't know is will it be 50 basis point or 0.5% or 75 basis point, 0.75%. The reason that I'm kind of thinking it might be 75 is just because of that Jackson Hole speech. However, if we get some more decline in the numbers for August, which we'll see in September for CPI, then I think there's a good chance that we could see them actually go with the 50 basis point. So let me paint a picture for you. Let's say CPI comes down again. Let's say it's even negative, right? Maybe we're 8.2, maybe we're 8, maybe we're a sub 8. Who knows, right? Who knows? Let's just say that it is another data point of inflation going down. All right, so essentially it'll be lower than what we saw for July. So let's take that as the first data point. You add in the fact that the jobs number was actually a miss, a very small miss, but it was a miss, and unemployment ticked up, which ironically, bad news is good news in this environment. Then you add the Fed. If they only do a 50 basis point on top of that, instead of a 75 basis point, this market, the stock market, at least for the short term, I think will rally. And for Tesla, this is where we weave into Tesla. I think there's some good, actually, you know what, before we get into that, so take that, move that to the side for 1 second. We're getting into Tesla. I also think it's a bullish sign, just to add to all that, the fact that Russia has essentially indefinitely stopped selling oil or natural gas to Europe. The G7 nations have essentially put a cap. Russia says they're not going to sell to anyone who has a cap. So that's essentially done. That's played out. We know what's going to happen now. All right. So, and we haven't seen any real reaction. All right. Oil's actually down today. Not only that, OPEC just agreed to cut by 100,000 barrels. Again, oil's down. We're still sub $90. I think we're at $86 a barrel for WTI. This is shocking. I never would have expected that to happen. But then again, that's why we're long-term investors, not short-term investors. So again, you take that, you take what's happening with the Fed, with CPI and all that. Imagine all that good news does happen. I think the market's going to rally. And why it's so important for Tesla shareholders is because all that news will essentially be over. All that bad news will be over. Maybe we even get some good news with regards to Twitter overhang today that Gary Black's always talking about. But then we get into the end of September. And that is perhaps a big bullish moment for Tesla shareholders. Why? Well, for one, I'll be on my honeymoon. I'll be in Mykonos. So if you're in Mykonos and you see me, say hi. But in reality, to be honest with you guys, wow. Just all jokes aside, man, it was a weekend. All jokes aside, at the end of September, we have AI Day Part 2. Now, historically, none of these events tend to lead to stock market rallies. However, one of them is bound to, right? One of them is bound to. And my prediction right now is that we'll hear some stuff about Dojo, we'll hear some stuff about FSD, we'll hear some stuff about Optimus, we'll even see a demo with Optimus, right? Maybe see some impressive things. But I still believe, and again, I have no reason to really think this is true besides some tea leaves that I see out there, or maybe I want to see them, who knows, but that they're going to have a one more thing moment, a Steve Jobs moment, right here, Steve Jobs moment, where Elon Musk, right here, unveils a robotaxi prototype. I think that could happen. If they are serious about releasing FSD wide release to everybody by the end of this year, if they all of a sudden have the robotaxi listed right under the Cybertruck within their investor deck, if he's been talking about robotaxis nonstop, talking about FSD completion by the end of the year, it just seems like this is a natural place to do that, to have this unveiling. So you add that into it. That might be the one thing that could actually get the stock moving. The unveiling of a new product that they think can come to market quickly. And that would be a robotaxi. Okay, then right after that end of September, right? That's like the last week of September. After that, we get into October, the first days of October. And that's where we're going to get the Q3 total deliveries for Tesla. And at that point, if Troy Tesla is right with his numbers and they are clearly blowing out what analysts expect, and on top of that, we go ahead and start modeling things out and we really start to see what the numbers could look like for Tesla, this might be the moment that we go into the end of the year just sailing, no problems. Okay, so now keep in mind, a lot of things have to go right for all that to happen, but it's it. We're there. We're D-Day. This is the month where all that would happen, where all those things would start to domino effect and start to fall into place. Now, keep in mind, as far as the macros go, we don't just need a good August CPI. We need a good September CPI, October, November, right? We need to see good, consistent trend. And we need to see the Fed start to have some resolve and maybe start to like chill out with the rate hikes. But I think we're going to see that. I think the market's already priced all these rate hikes in. I think the market's already priced into about 4.25% for the Fed's fund rate. So I think we're in a very good place. What I don't think the market has priced in yet is Giga Austin, Giga Berlin, AI Day, the amount of vehicles that they're going to sell in Q3 and Q4, the pure profits that they're going to have, what's happening with regards to a potential increase in credit rating for Tesla from junk to good, right? I mean, there's a lot of things that are still left in here. FSD wide release, Optimus, whatever cool thing might be with that, future products, end of the year announcement for more factories. I think Tesla has been suppressed. My last video, if you guys didn't watch it, check it out. But it talked about how Tesla is coiling right now. Tesla's been in this range for quite some time, and Tesla has yet to break out for any of these big deals that have happened, right? And I think unfortunately, I think this is the story of Tesla, is that we coil, we pop. We coil, we pop. And that's just going to be on and on the story until the masses get it. The masses still don't get it. So instead of being frustrated, I'm not going to give investment advice. Nothing's ever investment advice on this channel. But for me, instead of being frustrated, which I am frustrated, I want the stock at 2,000 or pre-split 2,000 a share. I guess at this point, call it $600 a share, right? Obviously, I want that. But until that happens, I'm going to keep accumulating, right? I plan on buying more this week. I plan on buying more next week, right? Any spare cash I have, I'm buying more because I think that we're coiling. I think that we have sights for $2, $3, $10 trillion market cap. So that's what I'm thinking. That's where I am at right now. And that's all I can think about when it comes to Tesla these days. Now, I think a lot of this is dependent on the macro. I don't think that really there's much that Tesla can do at this point to really separate itself from the macros until maybe October 3rd, 4th, when we get to delivery numbers. That's going to be the only thing that really sets us apart between now and then. AI Day Part 2, again, that probably won't do it just because historically it hasn't. But again, if my long shot prediction that they unveil Robotaxi happens, or Optimus just seems ready to go commercial wide, or something really substantial happens, then I think that might let the stock run as well. But again, those are long shots. And again, historically, we haven't seen any real big movement after these events. So the real movements tend to happen after earnings or after it's been suppressed for long enough. And at this point, anything could set it off. Anything could set Tesla back to the moon, back to all-time highs. Now, that's kind of crazy to talk about in this current environment, but the truth is Tesla is extremely undervalued. So we'll see what happens. All right, those are my thoughts. Keep an eye out for a video tomorrow. Hopefully we get some more Twitter news. I would love to talk about that. And I want to talk about some other topics that I want to go a little deeper in. All right, so we're going to leave it there. Do me a favor, hit the like button, hit the subscribe button, ring that bell. Love you all. Peace.